But one stock which has actually managed to underperform a tad bit this year is Allcargo Logistics. We have with us the management, Mr. Ravi Jakhar, the Chief Strategy Officer, joining us to talk to us about how 2023 is likely to pan out, even if 2022 has been a bit subdued, at least with respect to the stock performance. Ravi, hi, good afternoon. Thank you so much for making time and speaking with us. First up, let's talk about the broad picture because you've outlined your aspiration that by FY26 you want to reach to a revenue profile of 25 to 30,000 crore with a EBITDA of around 24 to 2700 crores. Now, given the entire volatility when it comes to the external environment and what's happening across the globe, do you still hold on to that guidance or would you look at scaling it back maybe?
Yeah, so it's always a pleasure speaking with you. And let me first set the context right. On the 2022, which is the year coming to a closure, it's been actually a fantastic year for us as far as the business performance is concerned. We have had successful acquisitions. We have also had a very robust organic growth. Our digital agenda has moved forward in a big way. So from all that standpoint, the business has been an extremely robust calendar year 2022. And that has been in line with the last few years of transformation journey that we have undertaken. Your comment on the stock price, well noted, but that's something which is, driven by a multitude of external factors and things beyond our control. But I would like to speak on behalf of the company and reiterate that our performance in calendar year 2022 has been extremely robust. And looking ahead at 2023, and as you pointed out, we have shared some guidance for what 2026 should look like. I would say that the 2026 guidance should hold good. We see there are interim disruptions in the global economy, which could impact a quarter or two. In fact, if I look back at the current quarter, there has been a bit of a recession slowdown in many of the global markets. And based on the trends that we see around us, we do anticipate that a subdued situation might remain for the next quarter or two. Having said that, there are opportunities abound to continue to grow as a company, and thereby, even in the quarters gone by, we have seen that in many countries, markets have seen recessionary trends. But we have been able to make up for that on account of expanding our market shares. So as a company, we remain confident of the guidance provided. And from a macroeconomic perspective, we do see that the next couple of quarters could continue to remain subdued from a global context. As far as India is concerned, we haven't seen any decline in even the industry volumes, and the volumes have remained steady. They haven't grown as one would have expected. So to that extent, there has been a bit of sluggishness. But on an overall basis, I would say as an industry, there are recessionary trends in the global trade, which could continue for the first quarter and maybe a little bit of the first half of the calendar year 2023. On the Indian context, we don't see recessionary trends. We see a little bit of sluggishness. And second half of next year should be quite good for the trade industry at large. As a company, we continue to perform well through all these quarters based on the expansion market share.
Got the point, sir. Can you just talk about what does China reopen in a full-fledged mean? What would that essentially mean, Ravi? When we just talk about the outlook for the logistics industry, because they're a very important part of the global supply chain.
Well, absolutely. China is an extremely critical part of global supply chain. And what was happening throughout the last and the current year gone by was there were extreme restrictions in China, which were causing concerns between various cities. Intercity movements were impacted. There were constraints in managing warehousing and many other transport requirements in China. Now that changed over the last couple of months as the country opened up and brought down its regulatory controls. Having said that, what also happened is as they suddenly brought down these regulatory controls, the COVID cases surged, which means that significant part of population has been impacted. And if you look at our own people, maybe half the people got it over the last couple of months. And that means that at this point in time, most people are working from home. There's a disruption. There's a shortage of truck drivers. There is shortage of, labor to manage the warehouses. However, this is more of a temporary phenomena as it's going through what we have seen in India as well, a temporary spike of a couple of months wherein a large population got impacted. We see this trend flattening. And as you know, China would have its New Year in the end of January and first week of February. So we believe that by Chinese New Year, all the COVID-led disruptions in terms of rising cases should come down. And the very fact the Chinese government has already brought down the regulatory restrictions, post-Chinese New Year, the logistics should see very smooth operations because there would neither be government-led restrictions and nor would there be any COVID scares related concerns. That's how we see it. So I think another 4 to 6 weeks of constraints on the people side, but beyond Chinese New Year, China should open up really well.
Ravi, point taken. Hopefully by the Chinese New Year, as you pointed out, things would start looking better. But also wanted your take regarding the warehousing business in India domestically, because we understand that Merck is also looking at doubling its warehousing capacity. Plus, a lot of other players are also looking at expanding their capabilities when it comes to the warehousing presence. Are you a tad bit worried about the increased competition? What's your market share currently? Where do you see that headed?
On the warehousing business, we are the largest in chemical contract logistics. However, when it comes to other domains, we are still on a very small market share. And we see there's an immense opportunity for everybody to participate in that. We don't see that competition should lead to any concerns. Rather, we see there's a huge opportunity, particularly if you look at, there are two trends. One is an increased demand for warehousing, and within that, a shift from grade B warehouses to grade A warehouses. In the grade A warehouses wherein we tend to focus, our real estate business is focusing on building such warehouses and leasing out to tenants, which could be internet, e-commerce giants, or it could be our own logistics companies. And on the operation side, we have our contract logistics business, which manages the warehouses. So from both businesses' perspective, the increasing demand for warehousing in the country, which is again on the back of trends in e-commerce, consumption, and general movements towards more organized supply chains, companies preferring to outsource their supply chain. All these trends put together are leading to a significant increase in the warehousing demand in the country, and that's something which should work well for companies as well as for the logistics service providers.
Let you go on that note. Appreciate you joining us on the show, and here's wishing you the best in 2023 as well. Okay, for the markets, well,